Hey, good morning, everybody. Welcome into this week's long form episode on Mining Stock Daily. Trevor Hall here, your host once again. Our guest this week needs no introduction. Rick Rule is back here on the podcast for a lengthy conversation discussing a lot of what's happening in gold, where we are in the cycle. If you are speculating in resource stocks, and we also talk in depth. He gives some of his thoughts on specific stories which has hit the tape, including the suspension of underground operations at the Kakula mine in DRC. He also provides some thoughts on the Caliber Equinox merger. So lots to cover here with Rick. Special thank you to Integra Resources, Caliber Mining, and Visa Silver for their continued support of the podcast. And as always, if you wouldn't mind hitting that like and subscribe and sharing, it does us a tremendous amount of good as we continue to move into this bull market. They're still early days, according to Rick. All right, everybody, the one and only Rick Rule here on Mining Stock Daily. Let's jump into it. All right, everybody, welcome back into this week's long form episode. Once in a while, we get to have Rick Rule onto the podcast from Rule Investment Media, and also our host at the Rule Investment Symposium happening in Boca Raton later this summer in July, which I will be happy to participate in once again. And there's a long list of questions I have for Rick because we don't get to do this very often. So when I do get time with Rick, I try to take up as much of it as I can, respectively. So Rick, it's good to see you. Thanks so much for joining us.
Pleasure to be back with you. Thank you for having me back on.
Yeah, there's a lot of directions I want to take this conversation. So we're going to find a lot of deep corners into this mineral resource equity market that obviously you are no stranger of. You've built a fantastic career, but there's one topic that I really kind of want to jump in right away because it's something we have not covered here on the podcast in the last couple of weeks, but I would love to get your thoughts on it, not necessarily on the engineering or the developments of what's happening at the Kamoa-Kakula complex in DRC, operated by Ivanhoe Mines, but really just kind of the general theme about how even the best, most successful projects, the most successful entrepreneurs are faced with mining being a risky business. So let's jump right into this. They have suspended operations. The stock's been hammered, I think about 30 or 40% as we speak, a little bit of a rebound, but we haven't had a whole lot of kind of clarity about, the restart and what's happening there. We do know ore is being processed, but mining operations underground have suspended. Watching this news, general thoughts from you, Rick. I mean, how do you kind of tackle this, knowing we've been both big fans of Robert Friedland and this project for many years?
Well, as you suggest, you said mining is a risky business. I haven't in my life had the good fortune to encounter a business that wasn't a risky business. I'm still waiting. These are one of the risks of mining. This isn't the risk that I would have thought we would have been exposed to. I would have thought that with Zijin's global ability and their engineering capabilities, that they wouldn't have experienced this, but they did. This is, in one sense, interesting academically, because as an economic exercise, this is the difference between net present value and expected lifetime value. This incident will impact gravely earnings and cash flow of Ivanhoe for 6 months or 9 months out of a 50-year reserve life, which is to say this too will pass. On the other hand, this will have immediate impact, which means on a net present value basis, this is an important circumstance. What will happen going forward? Well, the first thing that will happen going forward is that while they are studying this circumstance and trying to figure out what to do about it, because they don't know, or they would have told you, they will be advancing development of Kamoa. Kamoa is a slightly larger ore body, but it is of much lower grade, which means that it will generate less free cash. But it will generate free cash, and they were in the process of opening it up and expanding it anyway. From the Ivanhoe viewpoint, they also will likely divert some human resources to Kapushi, their very high-grade zinc mine. Uh, Perception challenges are that both deposits are in the Congo, so political risk continues. Uh, my hope now that I've experienced the share decline that I've experienced is that the stock goes down further. The reason for that is I'm not going to sell at this price. Uh, so, uh, and I'm not going to sell at a fairly higher share price. I would like to see the stock fall another 20%, uh, because the arbitrage between net present value and expected total life value is becoming extraordinary. And I'd like to be a buyer as opposed to a seller. I realize that I have longer time frames and greater risk tolerance than most people. I realize too that I have, because I've experienced so much of it, a real tolerance for uncertainty. We don't know if a technological answer or an explanation will be available to us in a month or in 6 months. We don't know what the fix looks like. Will they have to support the crown structures with backfill? And people hate not knowing, but certainty is not on offer. And
Hmm.
so you have to deal with the circumstances in front of you. You have to deal with probabilities and possibilities, not certainties. There is no doubt in my mind that a year from now, or a year and a half from now, or 2 years from now, this problem is solved. It might be more expensive. It might not be more expensive. It might be solved in 6 months. That uncertainty is unnerving to most people because in my life, I've dealt with political uncertainty, exploration uncertainty, economic uncertainty, operational uncertainty. To me, well, I guess I'd prefer not to be challenged. I realize that what I want is not something on offer, and I deal with what I have. So I need to regard this now as an opportunity. Had I known 5 weeks ago, 6 weeks ago, that there was some possibility that there was going to be a ground control issue, and that the extraordinary free cash flow that I've been enjoying for a year was going to be cut off. Do I wish I would have sold? Yeah, but I didn't know. Legally, I couldn't have known, and so I couldn't have sold. So the question is, where are we? What's the best thing to do? And that depends on who you are. If you are somebody for whom this is going to cause you trauma, stay out of the stock.
They have mentioned that seismic activity continues at the project. That was just reported, let's see, a couple days
Yep.
ago. That was the last news release I have in front of me. But you did mention you'd love to see this drop another 20%. I would expect nothing other than that statement coming from you, Rick. I think I've heard of that from other equities as long as I've known you as well. But even if here, if we're talking at a $14 billion market cap, $15 billion market cap, is this an opportunity as well? Are if you haven't caught on to this stock, or should you sit here and wait patiently?
That depends on who you are. Um, there are real risks here. We don't know what the answer to this thing is. We don't know what it's going to cost to fix it. We don't know if they have to leave more support in place underground, how that's going to impact mining costs. There is nothing that happens positively or negatively that's going to change the fact that we're operating in the Congo, which is a risky country. There are a
Mm.
whole bunch of people uh, for whom this stock is unsuitable, no matter how cheap it is. I don't happen to be one of those people. I've operated in the Congo myself since 1996. By the way, in 1996, they were at the tail end of a war which killed 2 million people. When things go wrong in Congo, they go really, really, really wrong. If you are like me, if you have an absolute passion for gigantic generational assets, Kamoa-Kakula and the Flat Reef are just that. Kapushi is a great asset, but not a generational asset. I can tolerate 50% share price declines. I've done it a lot in my life because I love owning crown jewel assets. And make no mistake, this is a crown jewel asset. But the real answer to your question really depends on the person who's asking it. Uh, what are their time frames? What is their toleration for uncertainty? What is their tolerance for volatility? And differently than volatility, what's their tolerance for absolute risk? If
Yeah.
people are willing to operate in those creases, this is a superb stock. You are dealing with a human being in Robert Friedland who has unique capabilities. You are dealing with an investor, CITIC, the sovereign wealth fund of the People's Republic of China, and the partner, Zijin, one of the largest and best mining companies of the world. You're dealing with an extraordinary group of players in an extraordinary ore body in a very challenging neighborhood, in a very challenging country, and you are dealing with technical uncertainties that you don't have enough information currently to assess. If you find this interesting, this is a good speculation. If you find this terrifying, you should go elsewhere.
Yeah. That's could be said throughout the entire sector here, obviously. And there's been a few times in the last probably 18 months, Rick, where some of these words that you have shared with me and others, and throughout this industry, when there's blood on the streets or just absolute volatility in the stocks, sit back and give it some thought and talk about your own risk preferences. And I will say, through the conversations you and I have had, and me following you for a number of years, there's been a few times where I'm like, I'm glad I did exactly what Rick Rule have done, and I bought that stock when nobody else wanted to. So, kudos, thanks for sharing a lot of this information. I do want to kind of take a step back beyond this and really talk about the implications that this suspension might have on the copper market. I know this is really big picture type thinking, but do you think there's going to have any ramifications of this shutdown, knowing that supplies are already tight and concentrates, levels are super low? I mean, the smelters are doing anything they can do and actually paying people to get their hands on this stuff. So ramifications on the copper market from this?
I think that this will further tighten treatment and processing charges because there's going to be less high quality con on the market. It'll tighten the Chinese market, which is already tight because that's where the con goes. The copper market and the economy in general is very lucky that this is occurring right now. Whether we want to admit it or not, we seem to be in a fairly broad spread global economic slowdown. The oil price tells you that. And, I suspect that had this circumstance occurred a couple of years ago, that the impact on the copper price would have been much more dramatic. I think, depending on when startup resumes, that this won't have too much of an impact on the copper market, but I do think it'll have an impact on the smelting business, which right now is already a lousy business. That's something that the copper business was getting ready to do anyway, because Ivanhoe and partners were building a smelter in Congo. So that the concentrates which were being shipped out of Katanga to other parts of the world were already, at least some of them, slated to be diverted to a Congolese smelter.
Yeah. I'm curious about, we've had a lot of volatility based on economic policies coming out of the White House here in the U.S. And I'm curious how that has influenced, if it has all influenced your investment thesis in resources or commodity specific equities. Have you had to pivot or change your approach at all based on the headlines coming out of Washington? Seems like every 10 minutes now.
Well, the tariffs were a particular brand of stupidity. And I suspect that they were one of the conditions precedent to a global economic slowdown. I had expected the economy to slow down, but I hadn't expected it to slow down so suddenly. And I think the catalyst for that slowdown has been tariffs. I'm perversely lucky, I guess, in that I never expect good news to come out of a Republican or Democratic administration. And in that regard, I haven't been surprised. There were a lot of people who suggested that the Department of Government Efficiency was going finally to usher in the golden age of the American economy, where we got government spending under control. I always consider that to be farcical. I'm personal friends and a great admirer of David Stockman, who, by the way, will be speaking at my conference. He presided over the first Department of Government Efficiency. He was the director of the Office of Management and Budget in the Reagan Revolution. Reagan, unlike Trump, won by a landslide on a mandate to make government smaller. Politicians on both sides of the aisle derailed the Reagan Revolution within 6 months of inauguration. In a book, The Triumph of Politics, David Stockman talks about that. So the outcome of the Department of Government Efficiency was something that I anticipated, which is to say nothing. So in that regard, I wasn't surprised
Okay.
at all.
And with these policies and what hasn't worked, what they're trying to push through with this tax bill, like, we continue to have this debate. Are we going to see more inflation? Is this going to be deflationary? Like, what is your outlook on the return of inflation? Like, and how would resource investors prepare for a bifurcated world in here where, there's inflationary pressures on commodities, which the world we live in, but deflationary in asset prices?
Separate and apart from the department, separate and apart from the Washington theater, okay? Uh, let's cancel out the rhetoric and start looking at the arithmetic. The on-balance sheet liabilities of the U.S. government are almost 37 trillion. 30 trillion net of the Fed's own balance sheet. That's a big number, by the way. It's a big number. It's 6 times gross federal revenues before they spend a dime. But the bigger problem is the net present value of off-balance sheet liabilities. That's $100 trillion. That's not the nominal value, it's the net present value. Let's look at that math in context. The IRS suggests that the aggregate net worth of American citizens is $141 trillion. That's what we have. Our debt at the federal level, not state or local, not individual, not corporate, at the federal level is 130 out of 141. There's an $11 trillion margin. That's not very much, but it gets much worse. The on-balance sheet liabilities increase at $2 trillion a year, and the off-balance sheet liabilities accrue at $2 trillion a year. So if we keep going on our current course, our aggregate debts at the federal level exceed our private net worth in 3 years. People say, well, what about the assets of the federal government? Well, that's fine, but you can't seize them. They aren't actually collateral. Remember that the federal government is nuclear armed. Good luck trying to collect against them. So this is a real problem. I think that we deal with the problem the same way we dealt with the problem in the decade of the 1970s. In the 1970s, politically, according to the Congressional Budget Office, we reduced the purchasing power of the US dollar in an absolute sense, not relative to other currencies, but in an absolute sense. We reduced the purchasing power of the US dollar by 75% over 10 years. $1,000 would buy you $250 worth of 1970s goods and services in the year 1980. In other words, we reduce the real liability of unfunded entitlements while we honor the nominal value of those entitlements. There's no doubt in my mind that over the next 10 years, the purchasing power of the US dollar in real terms declines by 75%, which reduces the real liability of our unfunded entitlements by 75%. It brings $100 trillion down to $25 trillion. And that's going to have an ugly, ugly, ugly impact for those people who haven't prepared for it. People who are retirees will continue to get their Social Security. A youngster like me, like you, pardon me, is going to see an old guy like me who was promised $4,000 a month get the $4,000 a month. You aren't gonna, by the way. But the value of what I receive will be more like $800 or $900 or $1,000. And that's going to be difficult for people who believe that their retirement standard of living is going to be funded in the way that they expect. And there will
How
be
is
ramifications. There will be political and economic ramifications to that.
Well, and I want to kind of lean into it and talk about the preparedness of something like that to happen. Because, and if we just use the example of gold, and we can look at the gold chart, and we've seen how the eastern part of the world has just been fiending the hard asset for years now. Not just the central banks, but retail buying as well. We don't necessarily see the same level of activity in buying in the West, if from the United States retail. Maybe some institutions are going in there. It's hard for me to say. But what are you seeing as far as capital flows into these hard assets like precious metals and gold? Is this something that is like I said, we're seeing it in the East already taking place over the last couple of years, but are you seeing it in many signs that this is starting to happen in the West at all?
Well, understand that I exist within a gold ghetto. Uh, so that the people who respond to Rick Rule, the people who are cognizant of that style of arithmetic, uh, uh, constitute a very gold-centric group. You could say that I passed the collection plate through the choir through the years. So within my own universe, within the people who subscribe to my publications or buy my boot camps, there is a very consistent pattern of investing in gold stocks and saving in gold. And I'm delighted to say that that audience is growing. Uh, my subscribers grow by about 50 a day. And if you look just at that database, you would say that they aren't interested in gold, rather they're fascinated by gold. With regards to the broader country, let's start with the bad news. Uh, Precious metals and precious metals related investments comprise about 1/2 of 1% of total savings and investment assets in the United States. Gold to the investment landscape of the United States is about as consequential as a pimple on a blue whale. Doesn't matter. The 2 decade mean market share of precious metals related investments is 2%. So that if interest in precious metals reverts to mean, there will be a fourfold increase in interest. And I think that's what will happen. I was here for the decade of the 70s, and going into the decade of the 70s, a lot of folks couldn't spell gold, despite the fact that it's only a 4 letter word. They lived through the 50s and 60s, which were a very benign time. Very, very benign time. But after inflation ceased to be of academic interest, after the period 1968 to 1972 or 1973, when people saw the purchasing power of their paychecks decline by half, interest in gold soared. Now, we're just starting to see that now. We're seeing flow of funds into physical ETFs for the last 19 weeks. No, I'm sorry, 13 weeks, be positive.
Mm.
The flow of funds into the flow of funds into the products that I monitor the most, which are the Sprott physical products, have been astonishing. They've got a much more concerted inflow than the ETFs because they attract a different audience than the ETFs. The flow of retail funds into gold equity ETFs has gone decidedly positive in the last 12 weeks. So I would suggest to you that we're in the fairly early stages of a precious metals and precious metals equity bull market. If you measure that market differently, you get a different perspective. As you suggest, foreign central banks and foreign retail buyers, particularly in countries with a cultural predisposition to gold, say China, Vietnam, and India, have been experiencing substantial retail inflows for 3 years and substantial central bank inflows for 6 years. An interesting question that I confront in interviews about the gold bull market is that some of me wants to say it goes back to the year 2000. Uh, in 2000, the gold price was at $253 an ounce. Now it's nearing 3,500. Gold is up 12-fold in 25 years. That's 9% compounded. Uh, Have we been in a bull market, or has gold merely kept pace with the deterioration in purchasing power of fiat currencies? I don't know. What I do know is that the market in precious metals, the bull market in precious metals, is, I would suspect, in early innings.
Mm. Let's pick up on that, Rick, because one of the things I did want to kind of pick your brain about where we are at in this cycle, particularly with the gold equities. I mean, we've seen the producers, the gold producers, especially the top tier, lowest quartile producers, just absolutely have a nice run here over the last, 18 months, I guess you
They've
could say,
ripped,
and they've absolutely ripped. But they've also been punished. If they missed, they got hit really hard.
which they
But
should.
absolutely. Um, but so which companies have not kept pace? And then where are we? Like, is it time to maybe start looking up the ladder to smaller producers or even developers going through the permitting process? Where are the opportunities here in the gold space, I guess, is a simple question.
Very, very good question. And let's back it up a little bit. 2 years ago, 2023, people were very frustrated because the gold price moved, but the gold stocks didn't move. And there was a very easy explanation. The gold price was moving because foreign central banks were buying, and they weren't buying gold shares. So an asset class that had a buyer was going up, and an asset class that didn't have a buyer wasn't going up.
Hmm.
That was fairly simple. The other thing that was happening in 2023 is that although the gold price was going up, the inputs to producing gold were going up faster. Wage costs, social rents in particular, but energy too in 2023 increased in price. So the margins that the producers had didn't keep pace with the increase in the gold price. 2024 was very different. The increase in the gold price outpaced the increase in inputs, and the margins that the higher quality producers began to exhibit were stunning. Blew away the company's own estimates and obliterated analyst estimates, including my own. And the market noticed. Uh, the gold narrative was established by gold itself, the price move in gold itself, which caused people to look at the gold stocks. And then, lo and behold, the gold stocks performed. And when they happened, they went on a rip. I mean, an absolute rip. But that rip has been confined mostly to the biggest, the best, and the highest quality, which is what you would expect. The companies that deliver the best margin, the best free cash flows, are the companies that are producing the most gold. Uh, and the market has, with some exceptions, confined its rewards to the best. Now, there have been smaller cap producers that have delivered exceptional results that have also ripped. I'm thinking Lundin Gold. Alamos would be an example of that. Kinross, which people, as a consequence of their past capital allocations, expected would waste this bull market. Their margins have gone crazy, and the stock has gone crazy too. In answer now to the question, should people be looking different places? There is plenty of room left in the best of the best. So the answer depends on who's asking the question. Uh, Somebody who isn't willing to subject themselves to much volatility and would like to reduce risk can still enjoy, I think, several years of this bull market and enjoy the beta. I define beta as, in this discussion, as the amount by which the precious metals equities outperform the equities market in general. There is a lot to be said for owning Franco, Wheaton, Agnico Eagle, enjoying the market beta, paradoxically making less money than you would have you if you owned lower quality companies, but taking out all the operational risk. There's a lot to be said for that. If you look back at prior bull markets in gold, the beta in the market gives you 250 or 300% returns. And the idea that as opposed to getting a 300% return, you might get a 260 or 270% return, but with much less risk, is not an unappealing alternative for many people. For the people who listen to Mining Stock Daily, for the people who are willing to employ their intellectual skills on determining where the value arbitrage exists understand that a bull market can be visualized like a circus master's whip. The whip handle in the front of the whip, that's the commodity. The first 20% of the whip, that's the big producers. They move after the commodity, they move before anything else, and they move further than the bullion moved. The best of the rest, the mid-tier producers, that kind of thing, they're the second quartile of the whip. They move after the first quartile's moved. Then the single asset producers, the developers, and then finally the penny dreadfuls. That's the way it
Mhm.
works. And what happens is when the best of the best move, there begins to be valuation anomalies. Uh, the best producers trade at higher share prices relative to any metric. And two things happen. Guys like me look at relative valuations and they begin to take more risk to look for companies with lower relative valuations. If they don't do that, in a capital intensive business, the big guys take over the little guys. It's all about cost of capital. So
Yeah.
if you're selling at 1.8 times NAV, and you can buy somebody else at 1 times NAV or 0.9 times NAV, that acquisition becomes immediately accretive, and you do it.
Yeah.
As those transactions occur, and they're starting to occur, it goes all the way down the value chain. So the answer to the question is really, who are you? There is a lot to be said for those Americans who aren't currently involved in precious metals, who are part of the underowning mass, that rather than going down the value chain, they content themselves with a 200 or 300% profit over 5 years. For those people who are willing to take the time to listen to Mining Stock Daily, there is more money to be made being more patient because you'll have to own the stocks longer, taking more risk and enduring more volatility farther down the value creation chain.
With this gold market, we have seen some M&A, and I wasn't planning on asking you about this specific story, but I would love to get your thoughts here. There was a little bit of, I don't know, you could say pushback or kind of constructive debate about the merger between Equinox Gold and Caliber Mining.
Yep.
And we saw the financials coming out of Equinox just a couple of weeks ago. It was a huge miss. We talk about volatility and some of the best, but Rick, I know these guys are probably your friends, and you've probably sat here in the hypothetical situation I'm about to express to you and all the listeners. But you're sitting there, and all of a sudden, Ross Beatty, Blaine Johnson, and Doug Forrester walk into the bar, and I would sit there and be like, "Holy shit!" Talk about this trifecta of some of the most successful gold entrepreneurs we have here in the West. I mean, is there big expectations for this merger to come through? And does the new Equinox, can it reach that top tier kind of perspective and kind of take competition with the likes of Agnicos and the Kinrosses and those?
You've asked a lot of questions there, and the immediate answer is no. Uh, this is a good merger, make no mistake. Forster and Blaine Johnson built this company to sell. I was a founding shareholder of Caliber. For that matter, I was a founding shareholder of Equinox. And when they put Caliber together, they wanted to grow by acquisition. They wanted to build size and scale, and they wanted to attract, they wanted to qualify for indexes so that they attracted passive money, which they did. They've decided now to accelerate the growth. They know that because of Ross B's reputation, he will, by any metric, enjoy a lower cost of capital than they do. They see this as a merger where 3, Equinox, plus 2, Caliber, equals 6, as opposed to 5. And over time, they're right. There are challenges between now and then. This is a collection, with one exception, of second-tier assets. Equinox is building a tier 1 asset. They are having problems with on time, on budget nameplate capacity. That's why you saw the miss. Well, they've been building this tier one asset, and Ross would shoot me for saying this, but he wouldn't deny it. They have had to defer sustaining capital investments at some of their other investments, at some of their other projects, and they're going to have to catch up on those sustaining capital investments, or they're going to continue with materially higher all-in sustaining costs than they would otherwise have hoped for. At the same time, the assets that Caliber have are good assets, but they're not tier one assets. They're two-tier assets. They are assets that they've done a good job working on, but they'll have continued sustaining capital investments to make. What will happen, I think, if you follow the Ross Beatty pattern from the earlier companies that he has built, is that once he's put this merger to bed, and once the Canadian asset is finally performing at nameplate capacity, you will see him begin to sell off lower quality assets, fix his balance sheet, uh, and have room to do another acquisition down the road. But make no mistake, the primary goal is to build size and scale, to lower general and administrative costs by increasing the assets under management in one management team, allow more opportunity to deploy capital across a broader asset base, but in particular to gain access to a bigger market share in indexes and hence attract more passive capital flows. And they will achieve that.
What are your thoughts on Darren Hall, who's currently the CEO of Caliber and just phenomenal mine builder, mine operator? Any thoughts on him coming in and getting his hands on to what currently would be the Equinox assets, including Greenstone? Is that positive for you?
I think that there is room in Equinox for two mine build teams.
Hmm.
Whether or not that occurs is a different thing. I wonder what Ross is going to do with the Los Filos assets, where he has sociological challenges. It is clear that there is room at Los Filos for a lot of optimization. It is also clear that the existing team at Equinox has their hands full in Canada, so they can't go down to Mexico. Ross has two different things he can do. He can go into Los Filos and spend $100 million tuning it up, or he can sell it. My suspicion, if I was Ross, given the sociological challenges and the political challenges he faces in Mexico, rather than fixing Los Feliz, I would try to sell it.
Hmm.
I think we've come to the time where that asset should be owned by Mexicans. Whether Ross shares that opinion is a different story.
Ross, you can take it up with Rick. I don't want anything to do with that conversation.
We
I
talk a
have my
lot.
own opinion. Yeah, I'm sure you do. Um, I, with a lot of the policy thing set up, I want to stick with gold mining, but I want to focus on U.S. development. And we are seeing a lot more movement policy wise to get, permit applications moving faster in an expedited manner. That's healthy to see. But are you starting to pick up? Is there more, like, do you personally, Rick, have a little bit more appetite or more appetite for US specific companies, US specific projects that maybe you didn't have 6 months ago? But on top of that, to take that another step, is there a concern that the next administration would just backtrack all this stuff, the good stuff that's been done, because that's typically what administrations will do?
Answer to the first question is yes. I think what Mr. Trump can do is make the regulatory regime in the United States more responsive. It isn't just that the Biden team got in the way of stuff, like the access road at Trilogy in Alaska. Much more commonly, they didn't do anything.
Hmm.
And getting no response from the regulator is the same thing as getting a no. To the extent that Trump can um, make the regulators more responsible and more responsive, he will go a long way towards improving the investment climate for mining in the United States. Remember, however, that ours is a tripartite regime. You have federal, state, and local. So after you've decided that America is no longer a hostile place, you have to look at your state. Right now, I think there are four A grade states. Texas is an A grade state. Wyoming is an A grade state. Nevada is an A grade state. Alaska is an A grade state. I hear positive noises out of Idaho. Um,
You hesitate. Why do you hesitate?
well, often you know that politicians are lying when their lips are moving. There are the sociology of Idaho is that there are too many shops that are spelled SHOPPE. Uh, and I don't know if there is the political will in Boise, there certainly is in the hinterlands, to become pro mining. We'll see. I also hear wonderful reports from my friend Bob Quartermain about the political accommodation being made in the state of South Dakota with regards to his efforts. No, those are good signs. Almost invariably, mining gets good local support. Um, Often mines occur in areas that traditionally have experienced mining, and the citizenry is much more informed about the risks and the rewards. If you can deal with the problem at the federal level and you get motion at the state level, uh, you can get projects underway. It could be that the regulatory regime changes, but what you have to deal with as an investor, as a speculator, is the unknown, the
Okay.
bird in the hand. Uh, One interesting piece of evidence suggesting positive change has been the Resolution deposit in Arizona.
Yeah,
For
big
those
news.
listeners of yours who aren't familiar with it, this is one of the largest undeveloped copper deposits in the world. Median grade 1.5%, three times the average grade mined worldwide, well over a billion tons. Wonderful location, Central Valley of Arizona, between a couple of copper mines. Highway runs by it, power, water, towns with copper miners. Doesn't get any better. Rail. The deposit's been in the permitting phase for 26 years. 26 years. The Supreme Court just overruled one of the objections to the project, and Mr. Trump himself has mentioned the project by name, saying this is something that he is going to fast track. In other words, he is going to deal with the federal regulators. He didn't say that he was going to break U.S. law. He said he was going to deal with the federal regulators. If the politics and sociology of America have changed enough that we see resolution get permitted, then I think the game's on. This is an $8
Hmm.
billion project. If BHP and Rio are comfortable enough with the politics of America to proceed with an $8 billion project in an iffy state, Arizona, then I think you're going to see Nevada and Alaska in particular boom.
What about the Stibnite project being greenlit by basically by the Biden administration's way out the door
Yeah,
last year?
I think Stibnite is, I mean, wonderful. I used to be the control shareholder in part of that deposit, and
Hmm.
let's just say that the regulatory challenges were interesting. We've come now. That team has done a wonderful job in 12 years. I mean, an
Hmm.
absolutely spectacular job with community relations, an absolutely spectacular job with the state of Idaho. What changed? Well, part of what changed was the market for antimony and the fact that one of the byproducts of that mine was viewed as a critical element. But I think that you are seeing the beginning of a groundswelling of support for mining. The second deposit that we have to deal with in the state of Idaho is Delamar. And it'll be interesting to see how the state processes the efforts of Integra at Delamar.
Yeah.
Um, all kinds of local support. I was just there. When I say all kinds of local support, there aren't many people there, but those seven or
Jordan
eight
Valley in Jordan Valley is a very small town.
those 7 or 8 people who are there are all in favor of it. Of course, they're across the line in Oregon. Remember that between the predecessor companies um, to Perpetua, we have now been 16 years in permitting. Um, that's pretty
Wow.
sobering.
Yeah.
You take the good news that we've experienced in the last 18 months and you amortize that over 16 years, and you have to wonder what the appetite for new teams is going to be, looking at the history of permitting in Idaho.
Yeah. What's the kind of a follow up thought on this, Rick, that I just had, and if you bear with me here, on the grand scheme of the U.S. economy, U.S. markets, we kept on hearing about repatriation of capital. Everybody was invested in the U.S. stock market all throughout the world. Some way over their skis. Norwegian Sovereign Wealth Fund turned out to own a shit ton of Nvidia, for example. And the thought is behind the macro analysts is that that capital is going to start or has already started being repatriated back to their home countries based on some of the policies under this Trump administration that, for lack of a better description, have said your capital is not welcome here. We want U.S., focus on U.S. and U.S. alone, with the exception, I would say, of some of the Middle Eastern countries. And I want to take that aspect into this conversation and give your thoughts, because when U.S. companies go and market their work, market their company in places like the New Metals Investment Forum in Saudi Arabia, or they go to Qatar, Abu Dhabi, whatever, and start talking to those investors, because there's obviously a ton of capital there. And they're one of the few, actually, they're big allocators of capital for resource development right now. No one sense argue. But how careful do they need to be in promoting those projects into the United States? And the reason I ask this is because been to Idaho a few times, been to Jordan Valley, been to Arizona. If you talk about bringing in Middle Eastern money, it's going to be somewhat concerning. I don't know if the locals would accept it. That's just my thought, and I'm kind of like working on this theory in my head. Wondering if you've given that similar any thought. Is this something that companies need to be concerned about, or at least mindful of, when they go and market in the Middle East?
Uh, I have done a lot of business and raised a lot of money in the Middle East, and I am very comfortable with the investors that I've cultivated in the Middle East. I would welcome them as clients. They were
Mm-hmm.
clients of mine before I retired for 20 years, and I found them honest, thoughtful, intelligent, persistent, tenacious. I welcome Middle Eastern money into the United States. Unlike some of the more parochial Americans, I have a passport. I can spell Saudi. There is a lot of ignorance in a country as big as the United States, and I think that's very unfortunate. The prior part of your question, which is to say the increasing reticence of foreigners to invest in the United States because they feel unwelcome. The truth is, what's their second choice? The United States, for all its faults, is still 24% of world GDP. It is, for all its faults, still the biggest originator of technology unicorns in the world. It
Mm-hmm.
still has the largest financial services industry on the planet. If I think the Chinese were made to feel less unwelcome, they would still be our largest foreign investor, and we would still be their largest foreign investor. Uh, and the furor that is Trump will blow over. Uh, his future actions, I think, are fairly easy to gauge if you read his book, The Art of the Deal. He's transactional. He tells you in the first chapter what he intends to do. He doesn't believe that there are win-win deals. He believes that there are win-lose deals. And he believes that you make an ask that's absolutely outrageous, that you establish a very aggressive position to retreat from. You
Mm-hmm.
make the counterparty's life as difficult as you possibly can, including with the use of factoids, which is to say shouted suppositions that are basically and blatantly untrue. And then you settle for what you can get.
Mm-hmm. Mm-hmm.
It is amusing that his actions in his first term and his actions in the first part of his second term are so consistently predictable to anybody who bothered to read his book. And people are going to be forced to read that book now.
He is going to sell a lot of books
You know,
after all these years.
speculators, for whatever reason, often have the right strategy. They invest in copper because 5 or 6 years from now, there's going to be a shortage of copper. But they combine that correct strategy with absolutely lousy tactics. They have trauma holding stock over a long weekend.
Mm-hmm.
If you judge the outlook of the American economy by Trump's latest rant, you wouldn't do anything. You have to look beyond Trump, beyond his latest rant. You have to look at the fact that tariffs are taxes. You have to look at all these things, and you need to pay more attention to arithmetic than you do to rhetoric. And that gives you very different outcomes.
Sound advice, Rick. My last question, and I'm getting cut short for time, so we'll try to keep it as short as possible. But I do want to talk about exploration, and because we are, crews are back in the field. The further north you go, crews are finally getting back onto these projects, drilling. We're starting to see news headlines that drilling is commencing, which is great to see. So obviously, very busy time. The summer months, obviously, lots been happening down in the southern hemisphere as well, as those crews have been evacuating camp. But if we kind of focus on the next 3 or 4 months or whatever, what are a few stories on the exploration side of things that specifically you're keeping a real close attention to, that maybe you've allocated your own capital to, or you're keen that market should be paying very close attention to? That where's the blue sky potential going to come from when we start getting assay results here in the next few months?
I don't know in individual drill holes, frankly. I think we're going to have an exploration market that takes people's heads off. I mean, abs takes people's heads off. Whether it occurs a year from now or 2 years from now, I don't know. But I think we're going to have an exploration market very similar to the one we had in 91 and 92, which was one for the record books.
Hmm.
I say that knowing that most speculators will screw it up. Probably 85% of the listings in the exploration sector are valueless. They will ultimately return to their original value, their latent value, which is zero. All of the performance will be in 15% of the stocks, and 80% of the performance will be in 5% of the stocks. I, as anybody who's listened to this interview has gathered, am very statistically focused. Statistically, the highest probability of success in exploration stocks is in prospect generators, using other people's money and other people's expertise. The market doesn't like them because they're boring. Boring being the antidote to terror. I prefer to be bored to afraid. So I've been concentrating my own efforts in the prospect generators, using other people's money and other people's talent, because I have found in exploration, reward takes care of itself as you manage risk. And the prospect generators are the least risky. If you are sticking with a proven successful team in a terrain that they understand, particularly where you have the third dimension, where you have an ore grade intercept, the next 3 or 4 years is going to be kind to you, maybe extremely kind. If you're buying flavor of the month, if you're buying something because it was mentioned on 5 know-nothing websites, in a company where their general and administrative spend is 3/4 of their total budget, you're going to get what you deserve. You're going to go broke.
All right, Rick, I told you we'd keep that last question short. We were going to let you go, but before that, talk to us about the Rural Investment Symposium, again, Boca Raton, mid-July, right after the 4th of July break. I'm excited to go there and support it once again. What's the lineup looking like this year? How are you feeling 5 days?
Best lineup I've ever had. I've been putting it on 30 years. You care about U.S. budget? The questions you asked earlier? David Stockman, who wrote the book, is my keynote speaker. He's not a failed journalist. He's from the belly of the beast. Want to talk about the Fed? Talk about the Fed with Daniela DiMartino Booth, former Fed researcher. Want to talk about the corrupt nature of Wall Street? How about Nomi Prinz, former partner at Goldman Sachs? From there, we go to analysts and portfolio managers who've allocated billions of dollars to natural resources over the last 40 years, people where the rubber meets the road. We have the living legends, people who built multi-billion-dollar mining companies from scratch, telling you how to identify $20 million market caps that could become $5 billion market caps. Importantly, every exhibitor at my conference is vetted. If we don't own stock in them, they don't appear on the floor. We turn down more exhibitors than we admit. But where the rubber really meets the road is this. Whether you attend live or via live stream, if you don't think you got your tuition's worth, I give you your money back. We're the only investment conference in the world with an ironclad money back guarantee. Before the conference, I interview every single exhibitor. Those interviews are posted on YouTube or at the Rule Classroom. The conference itself, whether you attend via live stream or whether you attend live, has recordings available, which you will need for a year, because we're going to give you more information in 4 days, 55 hours worth, than you can absorb. And after the conference, we will maintain discussion groups about the conference at the Rule Classroom, so you can compare notes with other investors. In other words, although the elapsed time of the physical conference is 4 days, the conference itself will continue to work for you for a year. And if you feel it didn't, I'll give you your money back.
It's always a guarantee. I know this. All right, Rick, thanks so much for your time. We will leave a link to the symposium for registration. Anybody who's interested to check it out, those will be in the show notes. Rick, thanks so much for your time. It's good to connect with you once again. I think this is the first time you and I have actually chatted in depth since I think VRIC back in January. So it's really good
Well,
to see you.
we should do it again, and I look forward to hosting you in Boca Raton.
Yeah, absolutely. We'll see you in a couple months. Thanks again
Thank
for
you.
your time.